Hey traders, Jason here from Leavitt Brothers. In this video, I'm going to talk about managing trades when the market drops, or actually managing trades at any time. It's not rocket science. It doesn't need to be complex and stressful, but a simple system needs to be in place that allows you to capture gains, but exit when things change. Okay, quick reminder, my masterclass is available at the link below this video. It's the class I wish I had when I got started. Okay, it's the class I wish I had a year or two after I got started because it would have helped me get over the hump. I've gotten a ton of great feedback. It can be a game changer for you, so you should check it out. Okay, let's get on to this video. So what I'm going to do is I'm going to look at a handful of stocks. I'm going to show you the daily chart, and then I'm going to zoom in with the hourly chart and show you how the trade could have been managed and where your exits could have been. Okay, and I say could have been because all traders are a little bit different. All right, so first chart is BNGO. This was posted as a trade over here. That's a terrible line. As a trade over here where it was consolidating. Stock had run up. It had ridden its 8 moving average up. It was consolidating. We were looking to play a dip within the range and a breakout here. Stock was volatile, doing really well. Very easily could have broken out and run up 3-4 points. Ultimately, I was thinking like maybe this stock even goes close to 20. But the timing was wrong. The timing was off because it broke out, only ran for a couple days, and then it started pulling back. So the question is, in here, where is your exit? How do you get out of this trade? How do you manage it? So let's go over to the hourly chart. Okay, this is a 60-minute chart. Okay, so I should say for all these charts, the light blue line is the 8 EMA, the orange line is the 21, and the blue line, the bright blue line, is the 50. Okay, so this was the breakout from the last slide. All right, so what I see here, a couple things I see. This is something I teach in my masterclass. What I see here is the stock runs up, it comes back. What we have is we have the 8 crosses below the 21 right here, and then you have what I call a moving average kiss. This is something I talk about in the masterclass. So the orange line here goes like this, okay, and the light blue line crosses, it comes up, kisses the orange line, and then it starts to move away from the orange line. Okay, so the cross is normal. Okay, you're going to often, when stocks consolidate, you're going to get a cross here, but as long as a higher time frame moving average holds, you're fine. So in this case, we get a cross down and you get support from the 50, so it's fine. Okay, I'm going to get rid of these. But then when the stock pops back up and you get a kiss right here, that's a warning sign. Okay, so and then of course the stock drops below. So the combination of the kiss right here with the stock dropping below the 50 there, and then you could see that the stock kind of gets trapped underneath the 8 right here. That's your exit. Okay, I'm not going to get out just because of this happens. Okay, and I'm not necessarily going to immediately get out when this happens. But the combination of the kiss here, falling below the 50 here, and then getting resisted by the 8 here tells you you have an exit over here. Okay, and then of course, so if you're out at 13 or in the high 12s, then you completely miss the gap down here, which dropped all the way to 8. Okay, so that's how I would manage it. Okay, great stock, doing well, but the combination of the cross down, the kiss, falling below the 50, then riding the 8 down, the combination of all that stuff says you need to get out in here. Okay, let's move to the next one. Here's Fuel Cell. This is a stock that we've traded at Leavitt Brothers numerous times. Okay, we had this as a breakout at 10 here. Stock went up to 14, came down, tested the 10 level, tested the 21 EMA, ran up again. We reprofiled it here, broke out again. It treated us really well. I mean, this is one of those zombie companies that's been dead money for like 2 decades, and out of nowhere it comes to life and posts a big gain. Runs up here and then obviously runs into some problems over here. So the question is, how would you manage a trade? Now you could, because you got support from the 21 here and the 21 here, and it didn't come close to the 21 there, you could say, hey, the 21 is my is my get out level. Okay, because if you want to nail a big move, you have to be willing to sit through some pullbacks. Okay, this pullback, the pullback from right here to down here was like almost 40%. Okay, the pullback from here to here was pretty big. Okay, so like some books tell you, you know, put a stop at like 8%. I got news for you. If you put a stop at 8%, you'll never nail a big move like this. Okay, you have to be willing to endure some pain in order to nail a big move. It's perfectly normal to see a stock go up 50, 60, 70% and then give half of it back and then run up another 50, 60, 70%. And if you're not willing to sit in during that dip, then you're not going to nail big moves, which is fine if that's your trading style. But I'm just saying you're not going to be able to nail big moves if you have stops at 8%. So you could have put a stop over here at the 21, or you could have realized that this move here completely lacked volume. So while the trend was up and you wanted to ride it for as much as you could, you also knew that given the gains in place and the lack of volume on the most recent run up, you may have wanted to tighten up your stops. So let's look at the hourly chart and see how you could have managed it. So here's the hourly chart. You'll notice that the blue line here, the 50, is support. And so then the 50 is going to be an important level over here. So a couple things I notice here is that first, so the stock is consolidating over here. You can see it breaks out there. Volume's pretty good there. Everything looks great. You know, stock moves up, moves sideways, got support from the 50, resistance line there, breaks out, good volume. Everything is on board to sit in the stock and hold it. Then what we get is the 8 crosses below the 21 there, which is fine. Then the stock finds support at its 50 there, which is exactly what you want. Like, you know, short term it weakens, but then longer term the trend stays in place. But then you get a moving average kiss right here. So here's the 21, and the 8 comes like this, kisses it, and moves down. Okay, and you'll notice in between here, the gap between the 8 and the 21 starts to get bigger and bigger. So not only is the trend down at that point, but it's actually building momentum to the downside. Okay, so there's a couple different reasons to get out in this area over here. And I'm going to erase this and try to zoom in with this chart, or zoom out with the chart. Okay, so 3 different things come into play here. One is that 25 is a key level because it was resistance over here. So that's a key level right there. The 50 moving average is going to be a key level right there. And then the moving average kiss, which takes place over there. All 3 of those things in succession. First, the moving average kiss, then the stock drops below the 50 on the hourly time frame. Then the stock drops below 25, which was a key level back on the left side of the chart here. The combination of those 3 have you get out of the stock somewhere over here. Okay, so on this particular day, the stock opens up, and then has 3 consecutive candles that go down. I think that's what it is, if I'm reading that correctly. So 3 consecutive candles. So the combination of the kiss with the moving, taking out the 50, taking out 25, you definitely got to get out of the position over here, and then you're just simply not in for the rest of it. And if you're out at 25 and the stock drops all the way down here, 15, 14, you miss that whole move, okay? So you want to nail a big move. You got to be willing to sit in this kind of a pullback and resumption of the trade. But when the pullback tries to resume and then fails, that's when you got to get out, okay? So you can capture most of the gain, and then you're not in it when it drops so far. All right, let's move to the next one. Here is GEVO, okay? So another one of those cheap stocks that did really well. We got like a bull pattern here, consolidate here. Notice the 8 comes up and cups it and pushes it higher. Stock rallies. You got big volume there, big volume there, big volume there. Stock kind of moved out of a low here and then was consolidating up here, and then it failed. Okay, another one of those stocks that if the timing was better, and well, actually the timing over here was great, and the timing over here was great, and the timing over here was great. If the timing was better for this setup, stock was probably going to run up another 3-4 points, but the entire market started to move down, so the stock got pulled down with it. So the question is, how do you manage the trade? If you played a breakout over here, which is what I did, I was in the stock, and then you sat tight and waited through this, which is what I did. What do you do? How do you manage it? How do you manage this stuff over here? So let's move over to the hourly and check it out. All right, so here's the 60-minute chart. A couple of things that stick out to me is like, one is the 50 over here support, which means it's probably going to come into play, which it does. You can see support here. Notice on the way up, here is the 21, and then here is the 8, comes down and kisses. So this is a moving average kiss, which again I talk about in my class. So this is kind of a resumption of the trade here, and you can see that it takes out the high from over here. So this looks like a, you know, stock moves up, you get a moving average kiss, and we get a resumption of the trade, but then it fails. Okay, so then it fails, and the 8 crosses the 21 right there. You'll notice the stock right here kind of gets trapped, and I'm going to zoom in a little bit here. Okay, you'll notice right over here, the stock, here's the 21, so the stock gets trapped underneath the 21 and is sitting on top of the 50. So at that point in time, that's fine. Okay, 8 crosses the 21, stock is underneath the 21, that's fine. As long as it finds support at the 50, you're good to go. If the stock pops up, you're good to go. Okay, that's a normal rest within an uptrend. But what happens is the stock drops below the 50 over here. Okay, and then you'll notice that the gap between the 8 and the 21 starts to get bigger, 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 which means the trend is down and accelerating. And you can see the blue line here acts as a resistance line for the stock on the way down. Okay, so your first sell, your first warning is the 8 crossing the 21, which is just a warning, but it's not a reason to get out. When the stock gaps below the 50 right here, you have these 2 candles right there. Okay, that's your sell. Okay, if the stock gaps down like that and it can't recover, and the gap between the 8 and the 21 start to grow, that's your sell signal to keep most of your gain. If by chance you didn't sell and you just held because you're looking at some sort of bigger pattern here, something like this, well, the stock gapped up here. You got lucky. The stock gapped up, moved sideways, was strong on this day, but then again, what was previously support is now resistance, and when the stock failed to hold the gain here, then that's like your last ditch effort to get out. All right, let's get to another one. Here's NNDM. Stock was really strong. Rode its 21 here, 21 here, 21 here. So you very easily could have said, hey, resistance here at 18, and I got bottom of the pattern here at 14, plus the 21 comes in here at 14. So on the daily chart, you could have said, I'm just going to stay in as long as 14 holds. As long as 14 over here holds, because that's the bottom of the pattern, plus the 21 is there. So your first get out warning is right there. Okay, you got the stock takes out 14, closes below. There's one more day here, which it tries to get back above but fails, and then it falls apart after that. So let's zoom in with the hourly and see what that looks like. So here's the hourly. A couple things stand out. So one, you have support from the 50 here, so you're thinking that might come into play somewhere else. So what I see here is, number one, is you have the stock here. These are the highs. So right there, it gets rejected by the high. So when it gets rejected by the high, you got to be open-minded towards, hey, if it gets rejected by the high, it's probably going to fall back to some key moving average. So it comes below the 8 here, tries to find support at the 21 here, drops below that, tries to find support at the 50, drops below that. Okay, so a lot of warnings in here. So even if you wanted to stay in for the, till the bottom of the pattern, you got a lot of warnings there. So a couple things come into play here. So here's the 21. Notice how the 8 crosses below the 21, comes up and kisses the 21, and then expands off of it. So this is my moving average kiss, which I talk about in my class. Second thing I notice is that you got the 50 here, which it moves below the 50, tries to get back above, and then falls. So the combination of the moving average kiss from the 8 and 21 and getting rejected by the 50, that's a reason to get out. And so, unfortunately, it gapped down the next day. Sometimes that happens. To me, the exit is the next day when it gaps down. If you didn't get out, stock moves up but gets rejected by the 50 again and then starts to come off, and then you're definitely got to be out here. Okay, that's, in my opinion, that's how I manage to trade. Okay, 2 more tickers here. Here is TIGR. Stock did incredibly well. Okay, we profiled this at Leavitt Brothers over here when it was consolidating. Stock broke out from 20, went up into the high 30s. moved up, not a smooth mover, definitely some big candles in there, some gaps in both directions. The question is, how do you manage this stuff? Okay, you might be comfortable holding here because it's basically riding its 8 up, and anytime you ride the 8 up, you're good to hold. But what happens when like this sloppiness takes place? So let's move over to the hourly chart. A couple things come into play here. One, you have the hourly 50 as support, and then it's a key level over here. So similar to a lot of other charts, okay, you get a cross down here, but it finds support at the 50, so no reason to sell yet. You get a cross down here, but this time we fall below the 50 and we kind of get trapped underneath the 50, and notice the 8 comes in like this. Okay, so we got a cross here, the 8 and 21, we got a drop below the 50, we got the 8 and 21 getting further and further apart, which means the trend is accelerating. And then you get 8, which is the light blue line here, which acts as resistance. So in my book, this is a sell at the end of this day because it's getting trapped below several key levels. All right, one more chart. Here's WWR. A good acting chart. Stock was, formed a kind of a bull pattern here. It gets really, really messy in here, but it finds support at the 21, and it rides it up, and then it rides up the 8, and it did, on a percentage basis, it did really well. It steadily moved up and then steadily moved down, so more difficult to play. So let's zoom in with the hourly and see how we could have played it. This is one that we profiled at Leavitt Brothers. This is one that I personally played. So here's the hourly chart. What I see here is, stock steadily moves up above its 8 EMA. And then what I see here is I see the 8 cross below the 21. And notice the 21 acts as resistance. There it is. Okay, so stock drops below, tries to get above, gets rejected, falls, tries to get above, gets rejected, falls, tries to get above, gets rejected, falls, tries to get above, gets rejected, falls. Okay, so when a moving average establishes itself as support or resistance, you got to respect it. Okay, you can't ignore it. You have to assume that that's a stiff line in the sand that you should not ignore. So we get the 821 that crosses here. Let me get rid of these lines. So you get the 821 that crosses here, and you get possible support from the 50 here. But when you get into here, this area here where the stock is below the 50, comes down here, moves up and gets rejected for the 4th time from the 21, and then starts to fall, you got to get out. Okay, and you might say that's a big stop. Maybe it is. If you want to nail a big move, you got to have, you can't have stops too tight because you're going to give a lot of profit. You're going to get stopped out before big moves. So to me, the last place you should be exiting is over here when it gets below the 50 and then gets rejected. Right here when it gets rejected by the orange line and starts to fall. That's your last line of defense has to be right there. Okay, so keep it simple. In my masterclass, I spend time on stops and exits and criteria that can be used. One simple technique that you incorporate into your operation can completely change anything, or I should say change everything for you. So you got to check it out. Thanks for watching, and I'll see you next time.